Okay, peoples, back at you for GDX and GDXY. So what happened on 8/7? Well, GDX was down 2.58. We were down 5.57, but remember 57 cents, whatever, what was the distribution here? Hold on. Yeah, 58 cents when we round it was made up of, so it was pretty even. We actually weren't down as much as they were when you take away the payout. They did get 50,000 shares bought into the fund, so that gave them a little bit more cash. And here's the trades that GDX put on whenever you see 3 consecutive same number. So what did they do? Well, they bought a call at their 37 strike. It's the only active strike. They sold short a put. Since they're down here at 34 range, they're below. So they're able to sell the put, which is out of the money that, it's out till 9:20, so there's some time premium, but it's also, I can't see it there, but anyway, most of it is the difference between the strike price and where it's trading at. And there is some time premium. So that's why you get it. Once you're at the strike or above, it's going to cost you more to buy the call than it is to sell the put. And then they put 115 contracts and they use 36 as the strike price. And we'll talk about how far out of the money that was. So here is the data, right? 3471. So we're below 37 by 229, and we got like 242 with the time premium. So it wasn't much, to be honest. 115 contracts at 48 cents is $5,520. And then when we go over and look at the 37 itself, we see in the purple, you see it up here on 8,715. You bought it at 97, you sold at 242. The difference between 27,830 and 11,155 is 16,675. So we count that over in our August bucket. So this is also an August bucket. Only that is an 816, so I put a different color code here so we can see. And these will get taken off the table soon when I review those for you in a minute. We'll look at weeklies, and then I didn't add it to the weekly, so that's a good. Let me save this, and let's go over to weeklies. So we now have additional 115, and they're using a 36 strike. So that takes us to 75.70 for our total. And then when I pull it down, it tells me that we're only 1% out of the money, but guess what? This didn't get updated. So we're 3.72 out of the money. And these both went down yesterday. Down, down, down. Don't do it. Okay. So pretty flat on implied volatility. Again, where are we in this week's? Well, we've captured 93.59 of the money that we stood to gain. So let's go take a look at the holdings, which tells us a lot. So we updated the 50,000 shares, which is 3.39% of the total. And it says that the expected NAV is 1725, and we're trading at a whole nickel above that, right? 1730. So we have a rich premium. Okay, so let's take a look at the synthetic before we go into the calls. So that's getting uglier, right? You don't want to go down, even if it's a little bit. You want to go up. And so you haven't seen us. this fund was performing very well for a while, and the managers weren't writing the calls out because there's not much IV. And when gold starts to run and pulls the miners, they get pretty aggressive. And we were getting capped like crazy. So we've kind of, when you get capped when you run, and then when you don't run and you go down, you just lose on your NAV. And or you lose on your synthetic, which causes your NAV. We're collecting all our weeklies, but I don't know if this is the right index. If I was these guys, I probably would have gone out and picked one of the 2X, but they don't have the volume. So bottom line, they really should pick like a Nico Nickel, Nico Mining, AEM, one of the bigger but higher moving GDX components is probably what they should have chose instead of just the GDX. But I'd have to look at the options. They could pick a Newmont, but Newmont's going to be close to what GDX does because it's so large. But anyway, it's a little frustrating. I right now I'm just not going to buy any GDX. I'm going to do my own trades. I own a few hundred shares, not very much. I do expect this thing to perform very well over time, knowing what the metals and the miners are going to do. But at the same time, it's not yielding enough for me. I'd rather just put my option trades on a few individual shares and go that way. I won't get rid of the few hundred shares I own, but I just don't see it as that great a vehicle, other than you should have a very stable NAV in time. I don't see this thing going down to $8 and reverse splitting. If that happens, every single Yieldmax fund would be reverse splitting. The markets would just have to go abysmally down and drag everything, because at the end of the day, even metal mining stocks are stocks first, and then they belong to a sector. All right, guys, so what else? So this is ugly. I don't really like it. It can be made up, but when they do a poor job of getting us capped and we're not running, how do we get out of it, right? So that's the deadly sin of these funds, in my opinion. You really have to have a very high IV to make these things work. Okay, so that's why your Disneys and JPMOs and ARCs and so forth are paying high teens to low 20s. It just doesn't. I mean, this thing can pay that all day, 30% yield or 35% yield. But when you have better alternatives, that I would put those on. But I make good money when I do precious metals miners, option trades, or stock trades when I see the bull segment runs, right? The waves of the bull run running. Okay, so let's get into what is left. I think we're just really at the payout. So the good news, it's nothing. It doesn't even register. But that one call that we wrote, well, I should say we win it, but no guarantee on that. What's GDX doing in the pre-market? It's actually up at 35.23 by 35.24 with about 36 minutes before the market opens. And we have to stay under 36 because, well, that's, oh, geez, is that for next week? Yeah, see how crazy that is? They wrote a 36 for next week and we could go there today. So that's the silliness that they do, and they got practically nothing. There's just no premium to be had here. So guys, I mean, again, I'm bullish on where GDX goes, but if you're going to get no yield and you're in here for an income fund, don't buy it. I mean, I said buy it because you're not going to lose a lot of money on NAV, but this keeps up. There's just better ways to play this sector than this particular index. There's just no premium right now. Probably going to have to give it 6 months and run a lot to get them realizing that there's volatility. Okay, so on the payout, that's what I'm saying. We didn't collect anything. 5,500, it doesn't even register as a penny on here. So then on our synthetic, we collected 16,000, which got us to a penny because altogether at 20, that's what this is registering. Add the two numbers together, and it really needed to be 1.5. This was probably a penny on its own, and this was a third of a penny. So now we have a penny and 3/8. So it only shows as a penny. If I made this 4 or 5 digits, you'd see it, right? And yet we got $1.05 loss on our synthetic. All right, guys, a little tired here with the flu bug I'm fighting. So I'll let you go again. This is not fun. Sorry, I'm just not mentally as sharp as normal here in describing this stuff, but I'll get better. Again, this is not financial advice. I'm not a financial advisor. This is for fun and entertainment. Okay, guys, hope it's a great day ahead for us all. Bye for now.